keeping up with global trade, especially something like a trade war, can honestly feel overwhelming.
It really can. So much noise.
Exactly. So consider this our deep dive, your shortcut to getting the essentials on the U.S. trade situation as of, well, early 2025.
We've gone through news reports, economic analyses, trying to distill it down.
Yeah, our mission today is basically to unpack these tariffs, what they are, why they happened, the economic fallout, and also this unexpected twist involving global ports.
Okay, so things really started heating up again in January 2025.
Yeah.
This wasn't entirely new. It built on some previous policies.
Right.
But then February saw the first big wave. We're talking 10% on goods from China and a hefty 25% on Canada and Mexico.
That 25% was initially tied to a national emergency claim, wasn't it? Something about the border.
That was the initial justification, yeah. Though interestingly, those tariffs on Canada and Mexico, they were paused pretty quickly.
But China, they didn't wait. They retaliated almost instantly, didn't they?
Immediately. Duties on U.S. stuff, they even launched an investigation into Google. And then came more targeted tariffs from their side, hitting U.S. coal, LNG, oil, even farm machinery and cars.
Wow. Okay, so a broad response.
Definitely. And the escalation continued. March saw hikes on steel and aluminum tariffs, and they removed previous exemptions.
So hitting harder there, too.
And this concept of reciprocal tariffs started getting floated. Basically, the idea of matching whatever import taxes other countries had.
Sort of a tit-for-tat approach.
Yeah, we could say that. Then, March 4th, things really kicked off. Those paused U.S. tariffs on Canada and Mexico that went into effect.
Okay.
25% on most things, 10% on energy, potash.
Okay.
And the U.S. tariff rate on China doubled, went up to 20%. China hit back again, targeting U.S. farm exports specifically.
Ouch. Farmers caught in the middle again. Then came April. Right. Tariff Liberation Day.
Yeah, April 2nd. That's when those reciprocal tariffs were officially announced, a baseline of 10% for everyone.
But higher for countries the U.S. runs a big deficit with.
Exactly. So China got hit with 34%, the EU 20%, Japan 24%, South Korea 25%, Taiwan 32%. Big jumps.
And cars weren't spared either.
Nope. Auto tariffs started April 3rd. Canada immediately said they'd match them on U.S. vehicles.
And it didn't stop there, did it?
Not even close. April 9th, another huge increase. The U.S. tariff rate on Chinese goods soared to like 104%.
104%?
Yeah. And China announced retaliation, hitting 84% of U.S. imports. The EU also formally approved their own retaliatory package around then.
Okay, so why? What were the stated reasons for all this back and forth, this rapid-fire action?
Well, the official objectives mentioned were things like reducing the trade deficit, particularly with China, bringing manufacturing jobs back to the U.S., protecting technology.
Addressing things like IP theft, unfair practices.
Right. That was part of the narrative. Protecting domestic industries, aiming for fairness and reciprocity in trade deals.
But underneath that, what were the drivers? It wasn't just about the stated goals, presumably.
Probably not entirely. I mean, you had the long-standing trade imbalance with China. That was definitely a factor. China's growing global power was certainly a consideration.
And maybe some frustration with how things worked before, like the WTO.
Yeah, frustration with the WTO system. A perception that Chinese state-owned companies had unfair advantages. A desire maybe to reassert U.S. economic leadership. And, well, political promises, too. Tariffs seen as leverage.
Okay, let's shift to the impact. How does this potentially affect people listening? What were the economic worries?
Well, the big concerns were, potential for a U.S. slowdown, maybe even recession fears creeping in. Higher inflation was a definite risk, making everyday stuff more expensive, and just generally slower GDP growth.
And specific sectors felt it more, I imagine, like farmers.
Oh, absolutely. U.S. farmers were hit hard, losing that huge Chinese market for things like soybeans, corn. Retaliatory tariffs made them less competitive globally. Real worries about losing market share long term.
What about manufacturers in the U.S.?
They face challenges too. Higher costs for imported parts and materials, losing export markets themselves because of retaliation. Made companies hesitant to invest, and that whole idea of reshoring jobs didn't see huge success.
And the impact wasn't just in the U.S., right?
No, globally it ripples out. Projections showed slower growth for China, potential export declines for the EU, Canada looking at a GDP hit. It affects everyone.
Okay, now for that twist you mentioned, the port deal.
Right, this was unexpected. China actually blocked a massive $23 billion sale of global ports, including some really strategic ones in the Panama Canal, to a group led by a U.S. investment firm, BlackRock.
Wow. Why? What was the official reason?
Officially, antitrust concerns, but it's widely suspect that the real reasons are more complex.
Like wanting to keep control over those shipping lanes, especially Panama?
That's very likely part of it. Maintaining influence, maybe some annoyance they weren't consulted earlier. It could even be a bargaining chip in the wider trade dispute, and concerns about U.S. influence in strategic assets.
What does that mean, though, for global trade?
Well, it certainly adds another layer of tension between the U.S. and China. It could make future deals involving strategic assets much harder for U.S. firms. And it raises questions about the business environment, even in places like Hong Kong, where some ports are located.
Interesting. One last quick point. North Korea and Russia weren't hit with these new tariffs. Why not?
It's pretty straightforward, actually. They were already under heavy U.S. sanctions, trade was already minimal, so new tariffs wouldn't have much practical effect.
Okay, got it. So, wrapping this up, we've seen this incredibly fast tariff escalation driven by a mix of economic aims and, well, geopolitics.
Yeah, with significant economic consequences spreading out. And then this surprising port deal blockage adding another whole dimension.
So, a final thought for everyone listening. How might these big global trade shifts, maybe indirectly, affect your daily life? It's not always obvious.
Right. Think beyond just the price tags. Maybe how supply chains are changing or how much politics is now shaping business decisions worldwide.
Definitely something to keep an eye on. Lots of moving parts in this interconnected world.